Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu, this is Fintech Daydreaming.
Contextual banking, Chinese fintechs, accelerated digitization, banking 4.0, and an Australian futurist. All this and a lot more is coming your way on this week's explosive episode of Fintech Daydreaming. So buckle up, my good friends, and get ready for an exciting episode. Hello, everybody. I'm still Paul Krogdahl, and will be your host for this episode of Fintech Daydreaming. And with me, sharing the microphone, although virtually, is my fantastic friend and partner in tech, Ville Sointu. Any deep thoughts or philosophical realizations you would like to share with us today, my beautiful good friend? Or maybe you've just got a good listener joke.
Well, both maybe, but I think our guest today will leave some space for the philosophical stuff for him to do later on. It's really nice to have our guest with us today. But we do have a joke, of course. I mean, how wouldn't we have a joke? We always do.
Absolutely.
And yeah, so this one is pretty well, good and in a bad way. Let's put it that way. So
Okay.
Did you hear that one of the local banks had to pull one of their credit cards out of the market?
No, I did not. Why was that?
Yeah. Apparently there was no interest.
Oh, they're getting worse all the time, aren't they? Do we want to give a shout out to the listener for that one, or does he want to stay anonymous?
Yeah, so it's a friend of the show who wishes to remain anonymous, and I respect that. Although we, of course, really much like our listeners to also give their names to these fantastically bad jokes. So looking forward to the future ones.
Absolutely, yes. Okay, Ville. So we have had some fantastic guests on the show in the past with us. Everything from C-level executives to groundbreaking, disruptive fintech entrepreneurs. But I am really excited to be welcoming our guest today. I know you have read some of his books, just like I have, and we've been, I would say, long-time listeners of his podcast. I think I could even say that his podcast has in some way influenced us and our Fintech Daydreaming podcast. I wonder if you could use one word. What would you use to describe our guest today?
Can I use two?
I'd like you to use one, but okay, yeah, go for it.
Technology optimist.
Technology optimist. I can see that. Yeah, nice one. I think for me, it would be futurist. And with that, it is my profound pleasure to introduce Brett King, who is a speaker, author, and the founder and executive chairman of Moven, to this show. Now, for those that might not know about Brett, and I cannot believe there'd be anyone that don't, Brett is an international best-selling author, a world-renowned futurist, and a media personality who has spoken in more than, I believe, 15 countries and given keynotes for fantastic shows and things like TEDx, Wired, and he's even appeared on most of the TV channels, CNBC, BBC, Fox, and Bloomberg, and even advised the Obama administration on fintech. He is the founder of Moven and hosts the #1 fintech podcast, Breaking Banks. Now, it is an absolute pleasure to have you on the show, Brett. How are you today, and how is the weather over there?
Well, I'm great. Thank you for asking. I'm in Bangkok, Thailand right now. And it's very pleasant. It's in the low to mid 20s at the moment, so quite temperate. But I'm in a hotel doing the quarantine before I'm allowed out at large. So 2 weeks in a quarantine hotel, but it's very it's very pleasant. Quarantine as they go, 3 meals a day provided. I've got a nice balcony I can sit and watch the river in the middle of Bangkok and watch the boats going by and so forth. And but it's as quarantines go in a lockdown, it's quite pleasant.
Oh, wonderful. Now, I'm sure for most of our listeners, you are no stranger, but maybe, it'd be kind and nice to get a quick level set for those who maybe do not know that much about you. So what is your background, Brett?
Actually, I'm obviously Australian, actually dual citizen, UK and Australian. My mother was British. I was in Australia till 99, and then started my period of nomad existence. I spent time in Hong Kong, in Dubai, in the UK. I've been in the US the last 10 years. I have residency in Thailand, which I'm increasingly spending more time at. Was planning to prior to COVID at least. But I started my career as a programmer, as a bit ripper, or and then got into the application of technology in business. I found I had a fairly rare skill in those early days as a coder, where I was able to speak to business people in a way they could understand technology. And that turned out to be quite formative in respect to the career. I spent a bunch of years working in sort of technology implementation for companies like Deloitte, as an example, where I did, technology integration in the financial services space, in the energy sector for a while. And then when the internet came along in the mid-90s, I bought my own internet service provider, ISP business, and sort of started down that route. Based in Australia with a telecom monopoly, it was impossible to make money, because as soon as you started to build users and make money, they'd put your backbone charges up. And so I ended up selling that, but then sort of getting into the e-business arena. So I headed up e-business for Deloitte during the dot-com. Near the end of the dot-com bubble, I was poached or approached by a digital advertising agency. So I was the regional managing director for that agency, as a company called Motor Media, one of the first digital agencies in the world. I ran their agency for a number of years in Asia. We had 4 country offices, about 10 million in revenue business annually. And then they, after the effects of the slowdown after the dot-com bubble burst, they retreated back to the US market, closed their Asian, European, and Latin American operations. I bought out the Hong Kong business and created a sort of a digital strategy consulting, niche consulting firm called User Strategy. I spent 10 years working with the likes of HSBC, Amex, Citibank on, Standard Chartered on global digital strategy, and wrote my first book, Bank 2.0, in 2010, which became a global bestseller in 18 countries, translated into a dozen languages, and that took me then to the US and sort of started my secondary career, I guess you could say, in 2010 while on the book tour for Bank 2.0. I came up with the idea of Movin'. I registered the domain Movin' Bank, or Move and Bank, as it was known back in those days, and formed the first mobile challenger bank in the world, based in the United States, in August of 2010. It was a little too early, as we may reflect on later in this interview, if you want to get into that. In 2013, started Breaking Banks, which is now, as you mentioned, the #1 global fintech podcast and radio show. And am working right now on my 7th book for release mid-year. So last 10 years have been pretty intense. Let's just say that.
Yeah. That's fantastic background and history. I mean, what got you into writing books? What got you into writing the first book?
Yeah, it's actually a good question, because I had written, I contributed to press. I'd done press over the years. I'd written articles for, various magazines and newspapers and so forth over the time, but I'd never written a book. When I moved to Hong Kong, I ended up teaching at university, which is ironic because I never completed university myself. I started a Bachelor of Commerce in Australia when I was younger, after leaving school part-time, and I was doing a traineeship programmer job at the time. Started part-time, work got too much, so I deferred my university. Many years later, in '97, Deloitte put me through an entrepreneurship program, which qualified me as a mature age student for an MBA program with Bond University in Australia. I did the first year of that, and then moved to Hong Kong, and so deferred again. So I ended up dropping out of university twice, and then teaching university when I got to Hong Kong. So, but in that process, it was a matter of synthesizing a lot of data to sort of try and create course curriculums and so forth. But I got very, very interested in the impact of technology historically. And I could see this cycle repeating itself of technology coming along and disrupting industries, disrupting markets, and incumbent businesses and industries denying that the technology was going to change their industry until it had been completely obliterated, right? And saw this repetitive cycle, and saw it happening in banking. And so in 2005, when I was working with HSBC, a guy there called Peter Brooks, who we're still good friends to this day, Peter asked me to produce a report looking at the next 15 to 20 years for HSBC based on digital disruption. And so we put together this very, impressive report, 64,000 words. It was almost a book in its own right. And we predicted a number of things that were pretty interesting. We predicted that by 2008, that internet banking transactionally would surpass the branch and ATM for HSBC's markets in the UK and Hong Kong and so forth. We predicted by 2015 that mobile would overtake the internet, app-based banking. We predicted social media would be extremely disruptive from a brand perspective. There was a lot of stuff. This is back in 2005, 2006, that has since come to fruition with guys like Peter, trying to push this report and get the board of HSBC and the exco of HSBC to understand the impact of digital and start adapting. It was extremely frustrating. We ran into brick walls, the brick walls of apathy all over the place for years, And so by 2008, I was like, there must be literally hundreds of thousands of practitioners sitting in banks today facing exactly the same frustration that I am, And so I thought, they need a champion. They need someone to, be the guy that stands up for the innovators in the room and gives them, some tools to work with. And so that was the motivation behind the first book. What was really interesting is, it almost didn't get published.
Okay.
Wiley, I pitched it to Wiley. Wiley rejected the book. They said, no, we just don't think the banking industry is ready for this. Marshall Cavendish, who's my longtime publisher now out of Singapore and the UK, they took a bet on it, but they were like, well, we're just going to do a small print run, 2,000 copies. We don't know if it's going to work. And of course it blew up, and the rest is history. And the reason it blew up was, I think, I was active on social at the time with, the fintech mafia folks and so forth. And, they helped create this sort of groundswell of activity globally. But I think more importantly, there were, innovators and digital guys around the world that read the book and said, right, I'm taking this to the CTO or the CEO. And they said, don't believe what I say, read what this guy says. This is what is happening, And that created this groundswell. I heard many times CEOs of banks saying to me, the e-business guy came to me, gave me this book. I read it. It blew my mind, and I bought a copy for every one of the management team because they had to read it too. And that was how the book sort of took off. And so that gave me quite an interesting platform. But that was.
We're struggling.
Yeah, I'm back.
Yeah, we're struggling a little bit with the internet connections here, all the way from you to us, but we'll deal with it. It's
No problem.
not a problem, no. But back to your books. I mean, I've read several of your books and loved your most recent one, Bank 4.0. If I'm honest, I would say that some of my perspectives on the future of banking and the sort of continued disruption we are witnessing has been partially influenced by your books. And as you take us, through the ongoing transformation from the old traditional banking models to a future vision in your latest book there, I wonder from your perspective, Brett, what will banks look like in 5 to 10 years' time? Will we still have banks, or will banks be delivered fully by tech kids like Ant Financial, and a new world of contextual banking on mega apps and social platforms?
The biggest change will be that, for the vast majority of the planet, their day-to-day bank account will be an artifact in the cloud and on a smart device. It won't be a passbook or a plastic debit card or a credit card. And it will be differentiated from those older artifacts by the level of intelligence that is built into it to help you manage your money. And so, we're really, that's the big shift, changing from a dumb passive artifact that's a value store to a smart bank account that helps you manage your money with AI built into it. And that we're finding it probably biases itself towards technology companies who have much broader data sets when it comes to behavior than traditional banks. And so, definitely, I think we're seeing the start of the smart bank account wars happening right now with the likes of Ant and, Google Wallet in the US and others making a play for the day-to-day discretionary spending. Doesn't mean banks will disappear. It just means your bank account won't necessarily be run by a bank. You'll have other banking relationships with other products like mortgages and so forth for some time. But increasingly, the contextual nature of banking, as you mentioned at the start of the show, will define who you choose for the underlying utility of the bank that you use, whether that is saving money or accessing credit.
What about decentralized finance? Where do you think that's going to fit into this? Or do you think that's just a flash in the pan?
No, I mean, look, you have to see decentralized finance as part of an evolution of the way money will work in the 21st century. And the biggest shift there is machine-to-machine commerce. And so once we start having robots and drones and autonomous vehicles transacting, whether it's paying a road toll or whether it's accumulating hours of work to be paid, essentially, as this occurs, the amount of transactions and volume of commerce activity will explode, but most of that activity will be automated between two different sets of AI. And so that's where it gets really interesting, because how does a autonomous vehicle sign a signature card at a branch?
Absolutely. And we've discussed on several episodes in the past, Industry 4.0 and these areas, including decentralized finance. But irrespective of the future direction of banking and the dominance of the tech companies, I suppose you could say, there is a fundamental drive today to remove the large asymmetry of information within the banking industry. I mean, banks have relied heavily on this asymmetry of information and lack of transparency. Now, both the consumers and the regulators are pushing for this to change. Reading your books, I get a strong feeling you have a perspective that technology and the growth of new technology will help to drive this change and heighten transparency within the industry. Is this a fair interpretation?
Oh no, that's accurate. Like if you look at the US market today, there've been because of lobbying groups and the previous 4 years administration we've had, the innovation of the banking sector in the US has slowed. Comparative to other regulated markets like China, Hong Kong, UK, Singapore, Australia, EU. And so, as a result, right now today, the US is probably 7 to 10 years behind China in respect to some basic elements of innovation around identity, around payments, around credit scoring, and so forth. If you're in a heavily regulated market that isn't adapting, you're going to end up being far less competitive on a global basis. The bigger challenge for these markets will be, we're going to find out fairly soon over the next decade that geographically based regulation is redundant. It's no longer important. You can't have artificial intelligence regulated on a country by country level basis when the technology platforms that are provided are global in nature. You must have, at minimum, regionally based regulation, but probably globally based. And regulators are going to start to compete with each other based on the level of innovation they allow in the markets and the way that innovation is structured. And so you could have conceivably the Monetary Authority of Singapore release a fintech charter for new fintech banks. And they say you can come and operate it in Singapore, and as long as data residency is looked after in respect to individual geographies, you can operate a bank account for anyone in the world as long as you can do the KYC, right? And so suddenly now you have a challenger bank that can offer anyone in the world an account based on a Singaporean charter. What's the US going to do? They're going to make all Singapore banks illegal? So ultimately, regulation is going to become an economy level competitive differentiation. And the more regulation you have that ties you to the past, the least competitive you're going to be. And the big change here will be when we have to encode regulation in AI. Yeah. Because once we transfer all of those old laws over the last 200 years and put them into code, we're just going to realize that a lot of those old laws are redundant and need to be rethought anyway. And so there's going to be a real evolution in respect to, the sort of process of taking laws and codifying them for AIs to interpret. And that's where I think we're going to have a lot of regulatory reform.
Yeah, fantastic comments there. I mean, we've had a lot of discussions, maybe too much discussions about regulation in this podcast before. So good to kind of get a fresh perspective on that. But switching gears ever so slightly and looking back a few years to your book Augmented, which was published in 2016. Now, to me, the book was really all about technology optimism, and it was a bit of a switching of gears for you as well, kind of deviating a little bit from the full fintech agenda of your previous books. And so everything I read from that, I saw so much optimism. And in the beginning, I said that you're a technology optimist because it was really about seeing all this development in a positive light. And I suppose that was intentional and, of course, very positive and a good read, and kind of gives hope for the future. And I definitely recommend it for everybody to take a read as well. Now, that being said, and with a few years between 2016 and 2021, January, where we are right now, with the ongoing global pandemic, the social media fueled political tension increasing all over the planet, has your perspective and positive outlook towards technology shifted at all over the years?
Funny you say that. I'm writing a sequel to Augmented right now, which is sort of focusing on the problems associated with technology writ large, but also the bigger problems that we have at a society level. Rolling crises, particularly inequality, which technology has accentuated. The coronavirus and future possible pandemics, the impact of artificial intelligence and automation on employment, and climate change. And so I still am optimistic that technology can solve many of the problems we face today. For example, if you listen to commentators like Ramez Nam, for example, who's one of the top guys in the energy field, we have more sun hit the planet in an hour that the entire world could consume in a year. And so we have the ability to basically produce energy for free, very cost effectively. Solar is already magnitudes cheaper than fossil fuel electricity generation, and has surpassed or fallen below the cost of traditional fossil fuel generation much more quickly than we anticipated, as an example. So why aren't we doing it? Why in the 1970s and 1980s, when climate change was known to be, impacting the planet, why were the largest companies in the world fossil fuel companies? And why was the market rewarding them for continuing to, spew carbon emissions into the atmosphere, knowing the likelihood that it was doing untold damage? And this is, really comes down to perverse incentives in the economic systems that we have today. And so this is a much bigger issue, obviously, than just talking about banking and fintech. But ultimately, the real question is, as humans, why don't we do longer term planning? Why can't we, come together at a time of crisis like coronavirus and act in the best interests of the species as a whole, rather than our tribes, our race, our political ideologies, and that's the only thing really that stops us as a species from having incredible abundance and incredible sustainable prosperity for the globe right now. And so, I'm at the moment I'm sort of musing on how do we solve that problem, and it's not an easy one to solve, obviously.
Yeah, I mean, obviously, us living inside the fintech bubble think that's the whole world. It's basically fintech, but the broader picture of technology landscape and the development on a global scale, of course, I think these types of books gives a lot of perspective for technologists like us as well. But one of the things that struck me in the 2016 version of Augmented was the way it approached data privacy. Now, you made a strong case that actually people will be less and less caring about privacy in the future, and we maybe voluntarily give away their privacy in favor of getting better services, better artificial intelligence enabled services and goods basically delivered in exchange for this privacy. Now, questions of data privacy and consent are often discussed even here in our podcast. And the current trend with all the latest incidents seems to lean towards better control over your personal data and to a certain extent, even resistance towards what the big techs are trying to achieve with everyone's personal data. I guess we've all seen the Netflix documentaries and read the books related to those topics as well. Now, is this just a small niche of kind of tech people like us making a lot of noise, or is this a valid trend that might actually impact the way services are built in the future? What's your view today to this topic compared to 2016?
I still feel much the same. If you think about where we're going to be in 10 years, you're going to have 99% of the planet digitally connected, hopefully, with technologies like Starlink and mesh networking and 5G. And you're going to have most government services and indeed, many major public services delivered through digital means, at least from a subscription basis or from a basis of attacking various problems that we have. And so when you look at that potential, you realize that the data that we have is going to be essential as part of that service layer. Now, there are elements that data we're going to have to be very careful about, the DNA of our children, our investments, our bank balances, these things will have to be protected. But our heart rate data, how many steps we've done, where we've bought things, how much we've paid for something on Amazon, Does that need to be protected in the same way? No, I would want that data to be deployed to ensure that I get the most personalized level of service and the best deals that I could possibly get. And so not all data is equal. And I think that's where GDPR, falls down in the EU, is that tends to take a too broad a view of this. Let's be clear. When we look at identity data as an example, your date of birth, your mother's maiden name, your address, your social security number in the United States, this data is not secure and will never be secure ever again. And so attempts to make this data private and, punish the system, for disclosure of this data is really a systemic failure in the fact that identity data shouldn't be those data points anymore. It should be biometrically based and it should be heuristically based, behaviorally based. And so, it's a fool's errand trying to protect your mother's maiden name and your date of birth from being stolen, because there's so many places where that data is readily available right now. Instead, you have to fix the core problem of identity working on the digital layer. And that's, the only economy that's really tackling this at the moment is China, with broad facial recognition. And we can talk about civil rights, but the fact is, if you're in China, the chances of you having your identity stolen are so much lower than in the EU or the US right now that it's ridiculous. And so, sure, you have data privacy, but anyone can steal your data. That's the conundrum faced by sort of this incumbent view of data. So we need to just grow up a little bit when it comes to understanding, what data is important and critical and should be made secure, and which data is a commodity and leverageable.
Yeah, there's also a slight problem that a lot of cases, the onus of looking after the data is put onto the individuals, and they don't understand the complexity and actually what they're doing, right? So you're absolutely right.
Even let's just take the common problem of the fact that you move from one bank to another or one country to another, and you have to start your entire process again with a new banking relationship because banks are the guys that collect identity information. That's ridiculous. Banks should just simply verify you are who you say you are. They shouldn't be the purveyors of collecting, identity information. You know what KYC stands for, right?
Yes.
Kill your customers with paperwork. And it's a ridiculous process in the 21st century. Anyone can go to my social media profile and immediately know, based on my presence online, exactly who I am. Now, admittedly, I'm an exception, in that respect to the broad population. But having said that, if you take that as an analogy, there's no reason banks should be collecting all of this identity information. They should be just saying, who do you say you are, and give me the minimum data required so I can verify that you are who you say you are, and preferably using something like biometrics, which are much harder to circumvent than, as I said, those older data points.
Yeah, I think that comes full circle back to the regulation question, because I think a lot of the local regulators are almost like outsourcing many of the KYC or identity kind of implementations to banks and requiring them to do these things in these arcane ways in a lot of instances. So yeah, I think there's a lot of work to be done in that space, because there are better options available. Couldn't agree more.
Absolutely. Just coming back to the banks a little bit, I mean, there is a general view that the challenger banks are generally struggling, that they haven't managed to get where they wanted to, and none of them have, really been able to be a competitive threat as initially thought that they would be as they adopted all these new innovations and technologies. Now this is a podcast focused on fintech and banking technology. And the disruptions that come with all of this great, fantastic stuff. So it would be, I would say, almost remiss of us not to ask you, Brett, do you think we will see a switch? Will the challenger banks have their day and glory? And what current fintech trends are you getting excited about at the moment?
Well, I I would take a little bit of exception at that assumption.
Okay.
The largest and most successful challenger banks in the world are profitable. Kakao in South Korea, WeBank in China. WeBank in China has over 200 million customers. They're extraordinarily profitable. Their acquisition cost is, like $1.75 per customer. They're continuing to grow. They're twice the size of JP Morgan Chase in terms of their customer base. So if you're looking at Starling Bank or Monzo or Revolut or N26 in Europe, and you're using that as a baseline, that's only one very small slice of the view of, the couple of hundred challenger banks around the world right now. Look at Nubank in Brazil, who, is doing incredible stuff. And so I wouldn't say that challenger banks are struggling. I would say that if you look more broadly, challenger banks have already created a massive market shift in terms of customer expectations. They've decreased the cost of acquisition 50-fold. They've set that as a new economic benchmark for the market. And in addition, they've been able to operate at scale with large customer bases at much lower cost per customer. What this ultimately means is the market at some point is going to say to traditional banks, your cost of acquisition is too high, your cost of operating is too high, and what the hell is up with branches? Because the economics will just simply say that distribution model doesn't work anymore. And so, we are seeing a redefining of the core economics of banking with challenges. Now, it doesn't mean they haven't, got challenges of their own right now during COVID and so forth. During these periods where you have, they're seeing sustained growth in terms of growth of customers, but the ability to necessarily get funding to keep that growing is an issue. And we're talking about lifetime value of customers and so forth to make sure they're profitable. But let's be honest, if you look at most retail banks in the world today, very few of their retail customers are profitable.
Yeah.
And so you have a large portion of, the profits of retail banks are built from their mass affluent customer base. And so, challengers are operating on that lower, the middle segment most often, at scale where, they're already taking on customers that for traditional banks are not profitable. So let's not pretend that traditional banks do better at creating profit from those sort of customer segments. That's not accurate. And so when we look at it in the aggregate view, we're going to say challenger banks really did redefine the economics of day-to-day banking in the retail segment. And then when you look at like the credit market as an example, and you take that, moving to a different type of challenger model. You look at buy now, pay later with Affirm and Klarna and these sorts of things. We're finding out that actually, credit built into a purchase is far more effective than detaching that and having you apply for credit as a credit card or a loan in advance of a purchase. And so, that's a behavioral shift. So there are some really fundamental changes taking place here that do fundamentally erode the traditional models, and the challenges are there. Now, not every challenger will survive. And that's part of the maturation process of the fintech sector that we're seeing in real time. You'll also see incumbents acquiring, fintechs and trying to, the Visa Plaid acquisition. It's come out now with the antitrust, investigations from the Department of Justice that Visa's acquisition was primarily to stop Plaid producing an ACH P2P payments competitor to Visa's interchange model. But if you look at, the growth of mobile wallets with Ant, Alipay and Tencent WeChat Pay alone, in 2018, these mobile wallets surpassed plastic card payments globally. Yes. We're talking about credit cards, debit cards, gift cards, GDPR. So, mobile wallets are already the dominant form of sort of day-to-day payments and discretionary spending. And so when you look at that, and you examine that, what's the impact of that going to be? Contextual credit, all of those things that come out of this, it's really a game changer from a core infrastructure perspective. So that's you have to step back from the problem of is Monzo making enough money per customer, and can they continue to raise enough money to keep going, to saying what are the broader systemic changes that all of this fintech is actually producing. And some of these changes take some years to actually flesh out when it comes to the market, but I can assure you, the reason fintech continues to get the level of investment that we've seen even during COVID is it sort of proves that, at least from a venture capital and private equity market, that they still see plenty of potential to disrupt incumbent banks through the fintech layer.
Do you think it's partially regional? I mean, you mentioned Alipay, WePay, a lot of strength in the Asia Pacific region versus the European region and possibly US. Do you think there is some specific willingness to adopt and change more in the Asia Pacific?
No, the only difference in China in particular with the rest of the world, one of the reasons mobile payments have exploded there is there weren't alternative rails. There was not embedded behavior around payments, so plus card payments were not very popular in China prior to the emergence of mobile payments. Cash was king. Checks didn't exist, and so coming into the Chinese market, all you really had to do was displace cash. If you're coming into the US market, you've got to displace checks, cash, plastic cards, interchange, and card schemes, point of sale. You got to disrupt merchants. There's a much higher hurdle, to sort of change behavior there. So in that respect, the markets where we've seen incredible growth around these new arenas tend to be those areas where there is less sort of incumbent, monopolies or oligopolies in respect to that stuff. Now, that doesn't change the fact that today we're sitting here and, if you look at mobile wallets on an aggregate basis, Alipay, Tencent WeChat Pay, Kakao, M-Pesa, Gcash, etc., MTN Money, Paytm in India. When you look at those in the aggregate, by 2025, they will be doing 5 times the amount of daily transaction volume combined than all of the plastic cards in the world. And so how long are you going to say that, that the interchange model, as an example, will survive when all of these competitive wallets don't charge merchants any interchange? How long will, checks, which take 3 to 5 days to clear, how long will those instruments survive when Gen Zs and Gen Ys expect payments to act like a text message, instantaneously? Yeah. And so you do have some legacy behavior that's sticking around, but it's not defensible. 300 years of technology development and innovation has shown us that incumbent systems like that never survive. Never. There's never once in the history of technology innovation has a horse and cart, won out over an automobile. It's the way technology innovation works. Yeah, it's inevitable.
Fantastic perspective to round off the show. Great discussions, Brett. Would love to go on forever, but unfortunately we're starting to run out of time here. Now, Ville and I would actually like to give you a chance to let the listeners know how can they find you and get in touch with you if they want to continue the discussions. And you mentioned you're writing a new book, so maybe you want to share a little insights into what's coming and what we can expect to read about.
So you can check out brettking.com. That's double T for Brett. brettking.com. You can go to LinkedIn, Brett King, at Brett King on Twitter. Wherever you search on Google, you should be able to track me down. In respect to the new book, it's called The Rise of Techno-Socialism. And it sort of focuses on those big problems I spoke about previously: climate change, automation, AI impact on employment, global pandemics, and inequality, and looks at the potential solutions to address or mitigate those risks over the next 30 to 50 years. And one of the things that attacks is, socially responsible capitalism. Not shareholder, capitalism, but stakeholder capitalism, and more broader influences from at a societal level. It doesn't mean we're not suggesting capitalism is necessarily going to go away, but we do think there'll be an evolution to more social good, sustainable practices and so forth, particularly as the Gen Ys start to be involved in policy making and so forth. So it maps out over the next 30 to 50 years the likely outcomes for potential futures for humanity, and describes the decisions that we might make along those paths that will lead us to a particular outcome. And those outcomes are neo-feudalism, techno-socialism, and a couple of others, I won't get into here, but, looking at the potential paths humanity could take, and where technology plays a role in, ensuring as a species that, we have the best outcome possible for humanity. So it's pretty big picture stuff. It's my I guess it's my opus, right? But we'll see how it goes. It's been a number of years in the making.
It sounds like a fantastic book, and based on having read your other books, I really look forward to reading it. Maybe we could get you to come back on the show after it's been published and have a discussion about it. That would be fantastic.
That'd be great.
Yeah. Well, fantastic. Thank you again for coming on the show, Brett, and sharing some of your great experiences, insights, and history with us here today. But most importantly, thank you to our dear listeners for hanging out with us for another fantastic episode of Fintech Daydreaming. Now, do you have a fintech subject you would like us to cover in a future episode, or maybe you have a great story to share and would like to join us as a guest in a future episode? Or did you maybe have a fantastically good but bad joke that you think other listeners might love or love to hate? Send it to us or get in contact with us via email on hello@fintechdaydreaming.com, or ping us on LinkedIn, Twitter, YouTube, or Anchor FM, and get in touch. Ville and I will be back in 2 weeks' time with a new guest. So see you all again then. This has been Fintech Daydreaming.